market value, that is still your possession, right? You still have to consume it, that become your asset. So we call these prepaid expenses. There are prepaid salaries as well. So any kind of prepaid rent, prepaid insurance, right? You paid in advance, right? So as soon as the time over, so this value start decreasing, and until at the end of the period, it is decreased to zero value. So advertising expense, rent, supplies. Supplies means all those, the consumable items, this kind of stuff we call the supplies. For example, office, pen, pencils, rubber, sharpener, ballpoint, stationery. These are called supplies, right? Screws, different kinds of like materials, lubricants of you can say that printing machines, color, cartridge. This is called supplies. You bought it at the advance, at the start of the year for the whole year. How much you have consumed, you record it as expense. How much you didn't consume, that is your prepaid expense. Now, long-term asset, of course, whose life is more than 12 months or 1 year. Simple, right? So there are two kinds of long-term assets. Tangible assets. Yes, sure.
So if I have a company and I buy myself a car, can I write it down at prepaid expenses?
And you buy?
If I buy a car, can I put it on prepaid expenses as supplies?
No. Car is the asset whose life is more than 1 year.
Oh, okay.
It's not like that after 1 year, it's going to be expired. No. So you still have its value. So here, that's a long-term asset, right? So life is for more than 1 year. Car, vehicles, trucks, transportation, trucks, these are long-term assets. And long-term assets are categorized as tangible assets or intangible assets and intangible assets. Tangible means which we can touch, like this pen, this laptop, but softwares, can we touch it? So that is intangible asset. Property, we call it intellectual property, this kind of stuff, softwares, right? Okay, guys, can you hear me?
Yeah.
Yes. Sorry about that. There was a small glitch of internet. Okay. So, what is the tangible asset mean, which you can touch? Here. So property, equipment means these laptops, right? Xerox machine, copy printing, printer, these are equipments, right? The AC, this kind of stuff. Property include land, building, all the stuff, vehicles. Now accumulated depreciation. Accumulated over the years. Of course, its life is greater than 1 year. So what is the definition of depreciation? So it is the amount of historical cost of the plant assets that has been allocated to expense in the income statement over the time as the asset has been used in production in producing revenue. So as long as you are using this table, chair, ACs, or the production plant, its value decreases, right? So that decrease in value is called depreciation. So that doesn't mean that you actually pay from your pocket these expenses. No, the value decreases. For example, this iPhone X that I have, I bought it at like 8,000 yuan, but now its value is decreased to 3,000 yuan. So it means over the year I have used how much? 5,000 yen. So my accumulated depreciation for 5 years on this iPhone X, 5,000 yuan. But did I pay from my pocket this 5,000 yuan? No. This is just that it helped me for my productivity, for using the stuff, checking emails and all those stuff. So this is called non-cash asset, and only depreciation, annual depreciation. So the 5-year accumulated is the asset. Annual depreciation is expense which goes to income statement yearly. That is 5 years, 5,000 in 5 years. So 1 year, 1,000 yuan. I am reducing its value by using the mobile phone. So this 1 year will go to 1 year. Depreciation is the expense. Both are non-cash. So this is non-cash expense. This is non-cash assets. Now long-term investments, which includes, like I told you, if your intention is to hold the stocks and bond for more than 1 year, you have extra cash, you bought bonds and enjoy its interest rates for 5 years. So that investment is called long-term investment. And now intangible. What do we mean by intangible? Like patents, trademarks, goodwill, right? Your employees or your R&D department invented something and you copyrighted, you patented it. Nobody else can use that over 10 years. For 10 years, that is your asset. Okay, class, welcome back after the break. So we talked about the intangible assets. What we talked about in that intangible asset, which has no physical form, which means you cannot touch or you cannot feel, you cannot touch and they don't have a physical state, but you can have the monetary value. For example, patents, trademarks, goodwill, copyrights, this kind of stuff. So we call this intangible assets, right? Of course, their life is for more than 1 year. So this is the balance sheet of the GAAP incorporation, but the asset side. So on the asset side, if you see here, so they first accumulated all the current assets. So there is a liquidity order. There is an order. First, cash and cash equivalents, short-term investments, inventory, also call this merchandise inventory, or just you can write down inventory, and other current assets, including prepaid and all those stuff. So they just combine it to other assets. So you have a total current assets here. Sorry, here, total current assets. Total current assets. And then long-term assets, we have plant and property net. So net means all the assets, long-term assets, minus the accumulated depreciation. That's why this is called net. Okay, otherwise in some cases, plant, property and equipment, and then they have written here accumulated depreciation and then other long-term assets. So they just made a net. So don't just get confused. So you see one thing here. So you have one line, and there is a 2 line here. So it has a meaning. One line means addition of all above, right? This one line means addition of these two. And these 2 lines mean addition of this line and this line. So 4309 plus this 2523590. Answer gonna be 7422. Okay. So don't just get confused, sir. We have a 1 line here and we have 1 line here, and what is these 2 lines? Okay. So have you noticed one thing? There is a word written here, partial. What does it mean by it? This is not complete balance sheet. So that's why it is written only asset side here, right? Asset side here. So the total assets are 7422. So these are 2 years. so that you can also compare from the last year. So if you see last year and current year, right, you see mostly it is increased or stays the same. So total current assets increased. So total assets also increased. So this is just for your comparison as well, right? Now the current liabilities or the liability side of the balance sheet. Similarly, the assets is equal to liabilities plus owner's equity. We do have categories of current assets and long-term assets. We do have the same category, current liabilities and long-term liabilities. So let's just talk about current liabilities. Of course, whose life is less than 1 year. All those payments that you must pay within a year is called your current liability. So what are their categories? First of all, accounts payable. So accounts payables are your suppliers. Those from there you buy goods and services or raw material, you purchase raw material on credit. Not cash, on credit. If cash, then these are not your liability. You satisfy your claim. That is, you still need to pay after some time. So most of the students, they make a mistake here. Okay, if there is a cash sale, they also include in accounts payable. No. If cash purchase is there, cash purchase is there, so it means our claim is satisfied. There is no outsider claim here. But if we still have to pay, then our outside claim is still there. So it means it is accounts payable, supplier, right? Supplier for purchases of inventory. Income tax payable at the year end. You have a taxable income, you need to pay tax, and tax going to be payable within a year when it is due. So it is a current liability. Accrued expenses. Similarly, we have a prepaid expense in which we pay in advance, right? Expense didn't happen, but we pay in advance. So that has a monetary value, so that we possess it. We call this prepaid asset. But now accrued expenses, which means expense occurred but not paid, like salaries. Employees work throughout the month and you are not paying, you are paying it after some time. Accrued salaries, right? Or the utility bills, right? You use the electricity all over the month and at the end the bill is coming, right? And you have to pay it. So this is called accrued expense. Expense incurred but not being paid, right? Now the last one is current maturities of long-term debt. So let me explain this after long-term liability. So what is the long-term liability? Long-term liability is life is greater than 1 year. So number one, the long-term notes payable or long-term debt. So you ask a loan for 5 years and bank give you the option. After 5 years, you need to pay you need to satisfy all your debt, but you need to pay some interest plus principal monthly, principal yearly, right? For example, you bought a loan or you took a loan for 500,000 and you will be paying 100,000 interest for 5 years. Okay, for 4 years. Let's make it simple. So this is